Hello dear students, welcome to Devika's Commerce and Management Academy. Anyhow, did you follow last class profit and loss statement from the final accounts, company final accounts? Yes? Let me know in the comment box. Profit and loss statement, if you follow, then only come to this balance sheet. Just simply same one, profit and loss account or balance sheet, same like normal final accounts, but only the thing is format is changing, vertical format we are following, right? Now in the same way, today's balance sheet format we'll see. Balance sheet format generally in final accounts, how do you use to prepare? T table, right? So horizontal T table, right side assets, left side liabilities. So rather than that, in vertical one format, we are going to prepare statement of balance sheet. So this balance sheet, first we'll start with liabilities, then after that assets. Both should tally, same like old one. That's all. Now focus on this statement, balance sheet. So how do you prepare? What is the format? You have to by heart it today. Very easy. Nothing to worry. So shall we go ahead? Yeah. So company final accounts balance sheet format. So this is the format. So it is continuation of this. There is no place now. Everything I can't write it in one format, one line. So I have continued this. First, as I told you, balance sheet, we are going to focus on the liabilities first. Liabilities also, as per this format, it's divided into four parts. First one is equity liabilities, share application money pending allotment, non-current liabilities, current liabilities. Very rarely you'll get, ignore it. Most of the time you'll find equity share capital. You know that in the balance sheet also we used to get. So equity share capital, non-current liabilities, current liabilities. Non-current liabilities means long term. More than 1 year if you take any liability, that is long term. So that we say it as a non-current liabilities. Current liabilities means within 1 year you have to pay. Short period when we take loan, when we take anything, borrowing. So within 1 year that is current. More than 1 year, non-current. Equity shares, you know. Only three things. These three things also you have to show it separately. Like first one will focus. Are you able to follow? Yeah. So first one, equity liabilities, as I said, 1, 2, 3, 4. First one we'll see. Shareholders funds. Shareholders funds. Generally what we used to write over there? Equity share capital, preference share capital, everything. Na? In the same way, shareholders funds. In shareholders fund, we have 2 points to remember. One is share capital, second one is reserves and surplus. Say along with me. So shareholders fund is the first point. Two bits are there in this. One is share capital, reserves and surplus. What is share capital? Whatever share capital is given in the problem, like equity shares, so and so purchased, and ultimately we must write what the company has received in the form of shares. So that we are going to write here, share capital. And second one is reserves and surplus. Company might have provided some reserves from the last year's profit, that reserves and surplus. So here only we are going to make all the adjustments related to the surplus and profit. Profit, where do you get? From profit and loss statement, not profit and loss account, profit and loss statement. From there you got a profit. That profit also we are adjusting to the reserves and surplus. Here it comes. Generally we used to add to the capital in old format. Now here we are not going to touch that profit to the share capital. No. What we are going to do? That profit statement, profit and loss account, there you got the profit or loss, that is to be adjusted to the reserve and surplus. Only 2 points under the shareholders funds. Shareholders funds means simple. Share capital, reserves and surplus. Shareholders funds. Share capital, reserves and surplus. Only this is the first point. Second one is share application money pending allotment. Still pending. So generally you won't find. If you find, we'll write. Otherwise you can ignore it. Third point is non-current liabilities. Under non-current liabilities, you'll find 4 items. Whatever you find, you'll write. Suppose this is not there, this is there, we'll write that one. We'll ignore this. These two are not there, only other long-term liabilities are there. Under this column we'll write. Are you getting it? What are these four non-current liabilities? Non-current means more than 1 year if you are borrowing anything. Okay? Non-current liabilities, that is we say. First one is long-term borrowings. Long-term. Generally debentures it will be. Long-term borrowings. Deferred tax liabilities. Tax to be payable more than 1 year. And other long-term liabilities. If any other long-term liabilities. Long-term provisions. If you are providing anything. So these four comes under the non-current liabilities. The non-current liabilities are over. Next, current liabilities. Current liability. Current liabilities also divided into total 4 parts. Current liabilities means within 1 year short period you have to pay back. So what are those? Short-term borrowings. Short-term borrowings and trade payables. Please remember this point. Trade payables. Trade payables means simple. Creditors and bills payable comes under the trade payables. Trade payables. Able to remember? Most of the time we'll find it. That is the reason I am resisting it. Okay? Trade payables. Next one, other current liabilities. Any other current liabilities? Any other current liabilities? Like bank overdraft, any other current liabilities. And short-term provisions. Provision for doubtful debts, provision for anything, any kind, such kind of things. These four comes under the current liabilities. Once again, first one is under equity liabilities, equity and liabilities, shareholders funds. Shareholders funds means share capital, reserves and surplus. Second one is share application money pending allotment. Third one, non-current liabilities. Non-current liabilities, 4 items are there. Long-term borrowing, deferred tax liabilities, other long-term liabilities, long-term provisions. Okay. Now current liabilities. Current liabilities also 4 items. Short-term borrowings and trade payables. Remember this, trade payables. I am once again insisting it. Trade payables. Because you can't write it directly bills payable under current liabilities. No. You have to show it under the trade payables. If you find creditors, if you find bills payable, these two comes under trade payables. And other current liabilities, short term provisions. So if we add everything, you'll be getting total. Total means total of the liabilities. Same vertical format continued by assets. Assets, that is why I have written here assets. Under assets there are only 2 columns. Here 4 items here. One is shareholders funds, share application money pending, non-current liabilities, current liabilities. 4 are here. 1, 2, 3 and 4. 4 subheadings are there in liabilities. But whereas in assets you will have only 2 subheadings. One is fixed assets, current assets. There is red pen, I didn't underline. Non-current assets. So you will find here non-current assets, fixed assets and current assets. So what are those fixed assets? Fixed assets means tangible assets, intangible assets. Please remember it. So fixed assets, current assets. Only 2 items are there. Fixed assets, first point, tangible assets, intangible assets. Tangible assets means which is visible, tangible. Okay, like furniture, machinery, land and buildings. So these are all fixed, means tangible assets, tangible. Intangible, we can't see. For example, intangible assets example, goodwill, yes. Goodwill, trademarks, copyrights, patents, these are all intangible assets. We can't see intangible assets. So fixed assets are 2. Tangible assets, intangible assets. Okay, these 2 points. Then after fixed assets, non-current investments. Non-current investment means long term. When we invest, we are keeping our investment long term, that is non-current investment. Then long term loans and advances. When we take, it is a liability. When we give long term, what is that? Loans and advances, then it is an asset. We are giving, it's an asset. In the same way, other non-current assets, if you find any other. According to the problem, we can go ahead. So total, remember, non-current assets are 4: fixed assets, non-current investment, long-term loans and advances, other non-current assets. Okay, so here fixed assets, two parts: tangible, intangible. This is non-current assets. Then current assets, only 2 points. Here you found 1, 2, 3, 4. 4 points. No? First point, second point, third point, fourth point. Now here only 2 points. Non-current assets, current assets. Non-current assets, current assets. Non-current assets, 4 parts. Now current assets, let's focus on current assets. Current assets are total 6 parts. 6? Yes, 6. What are those? Current investment. Presently what you are investing. Current investments. Inventories, closing stock, etc. And trade receivables. Trade receivables means debtors. Here creditors comes under trade payables. This is trade receivable. Able to remember? Trade receivable, debtors. Trade payable, creditors, or bills payable. Here also bills receivable also comes over there. Trade receivable, trade payable. Cash and cash equivalents. Cash and cash equivalents means cash in hand, cash at bank. Quickly encashed. Quickly we can convert. Quickly we can use it. So those items, cash and cash equivalents, we say. Generally cash in hand, cash at bank. And short-term loan and advances. Short-term loan if you take. And other current assets, which doesn't comes out of this 5, that is we are going to put it in other current assets. Okay, these are the 6 items. Generally all these things you will not find. As per the problem, whatever you find you have to write. Suppose you are finding bills receivable, where does it comes? Trade receivable, right? In that way whatever you find it, you have to write it. Able to remember? Non-current assets are 2 parts: fixed assets and current fixed assets and current assets. Sorry, non-current assets are 4 parts: fixed assets, non-current investments, long-term loans, other non-current assets. This is non-current asset. And current assets. Current assets total 6 parts: current investment, inventories, trade receivable, cash and cash equivalents, short-term loan and advances, other current assets. Okay, so this format you have to remember. First take a screenshot, I'll give you a recap. This is quite simple compared to statement of profit and loss. Statement of profit and loss, if you understand, this is nothing. Everything is visible, very clear. Only the thing is, whatever you are finding it, so keep on marking. Yeah, this comes under share capital, this comes under current liabilities, like you have to mark it. What you have to remember roughly is here, liabilities, 4 parts. What are those? Equity liabilities. The first one is shareholders funds. Shareholders funds are divided into 2 parts. One is share capital, reserve and surplus. Second one is share application money pending allotment. This most of the time you won't find. Non-current liabilities. Non-current liabilities are 4. Non-current liabilities means long term. Then current liabilities. 4 items are there. Non-current, current liabilities. Okay. And here share capital and surplus. These are liabilities. Now coming to the assets. Assets are divided into only 2 parts: non-current assets and current assets. Non-current assets total 4 points are 1, 2, 3, 4. A, B, C, D. A is fixed assets. Fixed assets is divided into 2 parts once again. So that is tangible assets, intangible assets. Tangible assets means fixed assets, like as I told you, machinery, furniture, building. Okay. And intangible assets, goodwill, patents, copyrights, etc. Fixed assets is divided into tangible, intangible. Then non-current investments and long-term loans and advances, other non-current assets. Okay, so these are all non-current assets. Then current assets. Current assets within 1 year, short one, whenever you are investing, that is current assets. So those are total 6. Current investment, inventories means as I told you, closing stock, etc. Trade receivables, debtors and bills receivable. Cash and cash equivalents, cash in hand, cash at bank. Short term loan and advances, other current assets. That's all. Both the sides means this is the total of liabilities and this is the total of the assets. Assets and liabilities total should be equal. Same like final accounts. That's all. One problem I'm going to work out because company accounts are very lengthy. Very lengthy. I have to prepare first of all statement of profit and loss, vertical, then related to that notes for point number 1 2 like that we have to prepare the notes is also important. Then after that fine, next you'll be preparing this balance sheet. Then related to this also notes you have to prepare. Suppose a surplus means directly you cannot write surplus. Related to surplus all adjustments will prepare it in keynote. Okay, note number 1 2 like that. Same like profit and loss statement, we here also we are going to give the numbers key note 1 note 2, so that note is attached. So that is only one problem I want to work out. It will be very lengthy, but you have to understand. Once if you understand one problem, you can go ahead. Next class will work out the problem. Okay, so check out the playlist, whatever is useful use it and do forward these videos. Stay connected. Good luck.